we're talking about bookkeeping and sort of financial information, record keeping, that kind of thing today, which is something I know we both work quite closely on a number of mutual clients and talk to people a lot about the benefits of good bookkeeping. So what I wanted to do today is sort of delve into those benefits and also some of the real positives that can be spun out of good bookkeeping. And talk a little bit about how in recent years, with the increase in cloud accounting and technology, it's never been easier or cheaper in some regard to actually maintain good financial records. Mm-hmm. You agree?
Yeah, I think that's fair. I think it's not just easier, it's actually the actual quality of the information you've got is so much better. I mean, if you said to any business owner at any level, whether it's a one-person organisation to a large company, how would you like to have a monthly profit and loss on your screen, which is accurate and you can compare your expenses and your margins? How would you like to be able to look at all the suppliers that you owe money to at the click of a button and all the invoices and when they were raised? How would you like at the click of a button to look at your customers and which ones owe you money and who you need to chase at the click of a button? Like, that is all possible. And there's no business owner that wouldn't want that. And, you know, before the advent of cloud accounting, it would have been a lot more difficult. Principally because if you wanted some advice around that, you're talking having to come in to see an advisor or them come to you rather than just looking at it on a shared screen and everyone having instant access to it. So yeah, not only has it never been easier to get there if you really want to put the time into it to get to that position, but what you can get out of it is just so much more than it ever was before.
Yeah, agreed. And I think we see this quite often. More and more people are being forced towards having their bookkeeping done on a regular basis, with making tax digital firstly for VAT and coming in for income tax for sole traders and landlords this year. But equally, I think for me, good bookkeeping systems are starting to win the argument, and people are moving towards them for for the right reasons anyway, which feels like a no-brainer. But I do think we are heading in that direction. So let's just strip it back a stage in terms of what bookkeeping actually means for us as accountants. What would you say are the key processes, the key tasks that need to be done, and how often should they be done in order to start that journey towards a good balanced and reconciled system?
Yeah, I mean, if you're using a piece of accounting software, it could be a nice, neat cloud one. Typically, the main thing you're going to look at is a bank reconciliation. In theory, fairly basic, but again, it often goes wrong and is the first place where it causes problems. If you're using a nice modern accounting system, then all your bank transactions are going to pull into that software. So you're not going to have to key them in or type them in anywhere. They're going to be there. So that's a great starting point for a bit of automation. And you're probably going to want to, depending on the volume of transactions, say on a monthly basis, you're going to want to essentially reconcile all those transactions. What does that really mean? It means putting them in the place that they need to go. So you receive some money from a customer, you're going to offset that money against the invoice that you've raised. You pay a supplier, you're going to offset that against an invoice. You pay yourself a dividend, perhaps if you're an own managed business, you're going to put that to the dividends code on your balance sheet. You're going to deal with all those transactions. That's essentially what that reconciliation means. The other key points usually to look at a fundamental level are going to be looking at your age payables and age receivables, which is how much do I owe to suppliers, how much do customers owe me. Those are really crucial informations for your cash flow and making decisions. And really, you should be able to, like I said earlier, at the click of a button, be like, bam, there's the list, there's the invoices that I owe to my suppliers, here's what customers owe me. And actually keeping on top of those, it sounds super simple, but a lot of the time it just isn't. You'll look at those lists and actually they're a mess. There's invoices on there that have been paid ages ago. There's customers that maybe have paid, but they've partly paid and the invoice hasn't quite matched up. And it isn't that difficult with a bit of a time and investment to make those reports useful. But it's very easy for them to go wrong. So really the key things for me would be reconciling your bank and making sure that those receivables and payables ledgers are correct at a certain time frame, which for a lot of businesses will be monthly.
Yeah, because that snapshot is often what most business owners are using, and the very prehistoric sort of management styles will be still to look at the bank balance. But like you said when we sort of caught up beforehand, if you're just looking at the bank balance, you don't know what you're owed from customers, so your assets may actually be higher. you don't know what purchases you've got going out, and then taxes as well, because of course corporation tax is payable 9 months after the year end if you're a limited company. VAT is often paid quarterly. For some businesses, it's receivable if you're in sort of zero rated activities, and those sorts of variables. Before you get there, it's sort of so many different numbers that you're in your head. You're knocking off that bank balance to actually get to what your cash flow looks like. I just struggle to understand how some people do that in their head, and this just feels like a complete no-brainer, doesn't it, to automate that?
Yes, and when you are doing it in your head on that sort of gut feel basis, the problems come later. Essentially, you might be doing well, and it might be okay. You might kind of get by because things are going well. You're busy, sales and work is okay.
Yeah.
Typically, with a small or medium business that maybe doesn't look after their bookkeeping in the way they should, it's the later on. It's when things start to not go well, they then start to maybe want a bit more and start to ask questions. And actually, by then, it's kind of a bit too late. Like, you should be on top of this stuff when things are going good, because you maybe could have stopped them. You could have maybe stopped the downturn. You could have spotted the patterns in your figures. But when you're going on for gut feel, that only really works when things are just going well.
Yeah.
And business isn't like that. There's going to be ups and downs. There's going to be things that you could take advantage of that you're going to miss because your numbers are just jumbled up in your head and going on gut feel.
Yeah, agreed. Okay, right. So we've got our system whereby the bank's being reconciled, our payables and receivables are being properly matched up to transactions, and maybe even we've taken it onto a slightly higher level. Again, we've looked at stock control, we've looked at accruals, prepayments, depreciation, some of those month-end adjustments. What do we do in order to maximise the benefit of that base financial information? I assume the systems you're talking about can generate all sorts of reports. What would be the sort of the key ones that business owners should be looking to pull out? And how much extra effort is there to go from a reconciled set of files to actually a report that means something?
Yeah, like I guess the normal accountant/lawyer answer to that is it depends, isn't it? But it does. It depends on the complexities of your business and the timing of all sorts of things. If your bookkeeping fundamentally is really, really good, so your bank reconciliation is spotless, everything goes to the right place, the way you get invoices in and pay them off, customers and suppliers, is perfect, then you're in a really, really good position to start looking at some reports that could be super useful. Firstly, from a cash flow perspective, you're already there. The bank has happened. What you've done with the bank is accurate. You can see where the cash is going. You can see exactly where it's gone over the previous months, and you can easily quite extrapolate that if you wanted to do a little forecast. It's then very easy to do because everything you're looking at is up to date and accurate. You're going to be able to easily run those reports about your customers and suppliers around your invoicing and seeing who you owe, who your biggest customers are, whether you've got an over-reliance on a particular customer or a particular supplier. The big ones that people like are usually tend to be profit and loss. A profit and loss on its own might not be a lot of use, but this month compared to last month, etc. All those comparisons are where you can really dig in and you can start eliminating that gut feel of, I think that I think that last month was better than this month. I think last year was better than last year. You can stop that gut feel and actually look at some real figures. Now, does really good bookkeeping instantly get you there? No, because you're going to have various, even at a basic level, you're going to have various timing adjustments that aren't quite going to give you the exact figure. So just as a basic example, let's say that you do a whole bunch of work in a particular month. You get to the end of the month, but you forget to invoice it, and you invoice it on the first of the next month. And you've got all these costs that have gone into the previous month, and apparently you've got no sales. Because you didn't raise the invoice till the next month. Yeah. You haven't really got no sales from an accountancy point of view. We're going to look at that timing adjustment. We're going to bring that sale into the month that it actually relates to. Same thing can apply to purchases. Yeah. So you're going to have all these timing adjustments that get you to a real figure. The thing with those timing adjustments is without good bookkeeping, you are nowhere near really being able to do any of those adjustments to get you a really nice, neat set of management accounts of profit and loss that can show you all those lovely comparatives that are going to help you make decisions and put some meat to your gut feel. Yeah,
because quite often you still need a little bit of underlying knowledge of the business, but we would be presenting those reports to the business owner that would have that knowledge. And I think the way in which the software has evolved over recent years is that when you're looking at comparing quarter with quarter, month with month, year with year, but also the budgeting function. So to spend a little bit of time putting in what you expect the current year to look like and then running off reports to compare all sorts of headings, sales, margins, profit, the rest of it. Can be done literally at the click of a button, can't it? If you set these things up correctly, then you can just click these buttons, generate whatever reports you want to see. And that's quite often where we spend our time. You let the technology do the majority of the reconciliation work, and then we spend our time actually generating really credible reports for our clients, don't we?
Yeah. I mean, you can create some amazing budgets and profit and losses just on the basis of the good bookkeeping work you've done. And actually, if that bookkeeping work is really good, it's going to help you spot those issues anyway.
Yeah.
So because you're doing it really accurately and you're making the most of the technology, you've nailed down your process really well. If suddenly you look at 1 month and your margin seems really far out or a particular expense seems really high, it's going to stand out to you like a sore thumb. Yeah. And you're going to be able to look at it and go, well, is that a legitimate movement? Is it something I need to make a business decision based on? Is it something I wasn't expecting? Or is it just an accountancy thing? And actually, we just need to amend some timing, do a bit of work on the management figures, and actually, it is what we expect.
Yeah.
But again, if your bookkeeping's really neat, you've got no chance. It's like finding a needle in a haystack because everything month on month will look non-comparable, and it won't give you any useful information.
So just thinking about why some businesses haven't embraced this in the past, and I think what it comes back to me is that getting your accountant to do your bookkeeping for you was generally expensive because there was a lot to it. Bags of invoices, bags of bank statements, a huge amount of manual work to do those reconciliations. And many small businesses don't employ an in-house bookkeeper or even a part-time bookkeeper because that's an extra cost that they'd rather avoid.
Yeah.
But actually, that triangulation of sort of the business owner effort, us as the outsourced accountant, and the technology has really changed the landscape as to what's possible for an affordable price, hasn't it?
Massively, yeah. Like you say, pre-technology, it was a massive piece of manual work. Either the business owner would sit there for a lot of hours trying to put together all these receipts and invoices and writing things down or typing them out or whatever it might be to give to their accountant at the year end, and it takes lots and lots of their time and effort. Or, as you say, they just give everything to the accountant because they don't want to spend the time and effort and they spend more money. Now, I think if you want to have really accurate bookkeeping, whether you as the business owner are doing it yourself or if you are employing someone to help you with that, actually all you really need is a bit of time up front. And actually, if you work with your accountant to not just look at the cloud accounting and the technology available, but your processes and how your processes feed into that technology, rather than having every single year, every single month, all this bookkeeping to catch up on, loads and loads of time. Your accountant's asking you things all the time. You're digging up invoices from 6 months ago. You don't need that. You can spend a good amount of time just upfront looking at the process, looking at the technology and saying, well, actually, this is how we can do that. And that initial investment can essentially save you probably across the years hundreds and hundreds of hours of time and expense and stress looking for old invoices and thinking about what you did 6 months ago.
Absolutely. It's a change in behaviour, and it's spending a little bit of time and effort and money at the outset getting these things set up. I was out with a client a couple of weeks ago, and I was fortunate enough that the client actually bought me lunch. And at the end, when the bill came and it was paid, I saw them take a picture of the receipt, scanned it straight into Dex, which I knew was going to pass it into Xero, and they said, well, I don't need that anymore, that's sorted. And I thought, brilliant, you know, this is the system that works. And actually when business owners do change their behaviours to embrace these things, it's quite liberating, I think, in terms of, well, that's it, done now. I know that'll be sat there. The payment will go through the bank feed. My receipt will feed in. They'll be matched up by the accountants. It'll take a split second. Job done. And that was something that, but it's just come on light years in recent years. So I think, what I've found, and I think what we've both found, is a firm like Lovell Blake, we're back in the running to do the bookkeeping for our clients, just because we leverage the technology so heavily. We're so at the forefront of when programs like Xero and all the bolt-on apps that go with it, as they change and improve, we are right at the coalface of those improvements, passing those savings on to clients. So no longer is a firm like Lovell Blake, going to be cost prohibitive to doing the bookkeeping, but ultimately with the technology alongside us, we're doing much more of this work, aren't we?
Massively. It's interesting because I was thinking of a client example. It was quite a few years ago now. So the guy was relatively early adopting to Xero compared to most people, and but he was very much on it. He wanted to engage, and it does require that. It requires engagement. If a client approaches us, we are going to be very engaged and going to want to help them to make their system as great as possible, not just for us but for them. It's gonna help their business. But if the client themselves isn't that engaged or isn't that concerned about it, they'll only get so far. This guy was very engaged. He wanted his records to be bang up to date. He wanted his Xero to be neat, accurate, reliable for him, for his day-to-day business. We're now years down the line on that, and it's got to the point where, because of that, all the initial work we did with him, he even understands most of his own tax planning. He understands his dividends, and he understands how it all interacts with his director's loan. But that didn't happen by magic or because he's a tax expert. That's because he really engaged in the process of keeping his Xero tidy and thinking about the processes of how his invoices go in and out. And then over the time, would ask the odd question here and there about and see how these things interact. And his records are very, very clean. They're really reliable for him. They're useful for him. He will make tax planning suggestions to me based on his bookkeeping. And what that means when we come to the year end is not only can we turn his accounts around super, super quick because everything's so tidy, but the money he spends with us at year end is more useful because he's not paying us to do loads of tidying up of his records and asking basic questions about invoices from months ago. And actually the time we spend with him is then much more strategic and much more useful to him. And that literally comes from a bit of upfront investment and time working with us with the technology on his bookkeeping and his record keeping.
Yeah, and I think that's becoming more and more common in that actually the money that you spend with the accountant, you should, in the world of continued automation, AI and all the rest of these things that are coming, nobody should be paying their accountant to do that historic manual stuff of invoices and bank statements and all the rest of it, because the technology should be doing all that. You should be spending money with your accountant, but you should be spending money on advice, planning, strategy, those types of things that are just so important. We're all paying more taxes. There's no way you can structure your business and avoid increased taxes these days, especially if you're employing people. So spend your money with your accountant getting good advice around tax planning and growth, strategic planning, and let the technology do the bookkeeping for you. And I think ultimately there's some really good packages where you can do the bookkeeping yourself, but the prospect of engaging with a firm like us to actually do the bookkeeping for you and using that system, has never been more worthwhile and productive. But like you said, it can actually then pass on savings at the year end, because when we get to the year end, the data is completely clean. We prepared it ourselves and we can spend our time doing other things.
I think the saving for a business owner is massive but intangible in that if you say, okay, I'm going to work with my accountant to utilise this new technology, I'm going to spend some hours with them, we're going to put some time and we're going to change our processes and our system and get this all working, and that's going to cost an amount of money that you can see. What you don't see is how many hours over the years that then saves you in scrapping around for invoices from months ago, how it changes your decision making on a day-to-day basis because you can actually see your numbers really cleanly, how much earlier you make decisions. This is kind of off topic a little bit, but this is going back to that sort of small, medium business owners making sort of gut feel decisions. There was a really interesting graph just before COVID, just before lockdown, and it looked at what small business owners did in terms of their cash flow and borrowing money compared to what massive businesses with big finance teams, etc., and what they did. If memory serves me correctly, I believe we locked down in March of that year, and the amount that big businesses borrowed in cash spiked massively in January and February because they looked ahead and they thought, well, we're not sure, because none of us were sure, but something might be coming here. This could be bad. Let's get lots of cash in the bank that we don't necessarily need yet, just in case. And that would have got lots of businesses through. Now, those big businesses with big finance teams, why were they doing that? Well, they could see their own cash flow. They've got up-to-date finances. They know what their current position looks like. They could easily factor in, okay, what happens if our sales drop off a cliff? How much cash would we need? Let's go get that cash now whilst the bank will still lend to us. What did most small business owners do? Nothing. The graph was flat. They waited until they didn't have any cash left. And then they saw, okay, the government's offering, once the government were able to get those systems up and running for CBILS and bounce back loans, okay, finally we can get some cash in, we can just about get through.
Yeah.
And that is often the difference, and that is where working with your accountant on the fundamentals and your bookkeeping can get you ahead. Because although that's a niche example, that is symptomatic of what small business does compared to big business. Small business tends to react because their figures aren't up to date. They're going on gut feel. They're running numbers in their head. Big business, they make decisions early before they even feel like they need to because the numbers are already there for them to do it.
Yeah, well, there's just even a basic bookkeeping product that we would use for a small or medium-sized business. You can tailor that. There's so many bolt-on apps and programs where you can look at budgeting, you can look at cash flow forecasting, you can look at stock management and all sorts of things in between. And so you can truly personalize the system to get what you want from it. But it's all underpinned by just being a little bit more disciplined, having the information input and spending a little bit of time or money to get that reconciled. But it can just open up so many benefits, can't it?
Yeah. I mean, without that, what a small business owner should probably ask themselves is how are they making decisions? How are they making decisions about their margins of the products that they sell or the services they sell? How are they making decisions about when to put prices up? How are they making decisions when to cut costs? When to invest in a new piece of equipment? When to hire a member of staff? Because without accurate numbers, what you must be basing that decision off again is your gut feeling, or maybe some historical accounts, some year-end accounts that have just been done, and you're thinking, well, they sort of line up with what I thought. Is that the way you want to be making decisions? And how much money would you actually save making those decisions if, in the first place, you just spent a bit of upfront money sorting out your bookkeeping, your systems?
Yeah,
all those decisions you make throughout your whole business life, you're going to save countless hours of pain and probably money, just because you're making your decision off something tangible rather than that feeling in your head and looking at the money in your bank and thinking, well, that might be okay.
Yeah. You've convinced me.
Yeah.
Let's do
this.
Good. Well, thanks for your time today, Dom. And if anybody is interested in learning a little bit more about bookkeeping and the services that we offer, they can find you on the website, and you'll sit down, have a chat with somebody initially without charge, just to have an initial discussion about what their requirements might be.
We have these sort of discussions all the time. We get someone in, we have a free of charge chat. We look at their system now, and we're not necessarily trying to reinvent the wheel for someone. We're just going to say, okay, what do you do now and what works for you, and how can we actually make that better and utilise technology? We're not going to rip everything up. No. We're just going to work with you to see how can this be better?
Best. Yeah, agreed. Get in touch with Dom. I do the same, as do many of our colleagues. So come online at the Lovell Blake website, investigate a bit further, and we're more than happy to help. So for this edition of the podcast, Dom, thank you for your time.
Thank you very much, James.
Thanks for joining me. Join us again next time.